Hello. Today I'm joined by Ollie Beckett, Fund Manager of the TR European Growth Trust. Brexit has been a headwind for a number of years, but has more recently been largely overshadowed by the pandemic. To what extent has it, and does it still factor into your investment decisions? And in what way does it come up when you speak with management of the companies that you hold?
Um, Clearly, we're predominantly a continental European investment trust. So, in some ways, not that much, but obviously, a number of our companies sell into the UK, are based in the UK. Look, it gets mentioned, and sometimes, as you sort of implied, it's difficult to disaggregate it from pandemic impacts. So, for example, there are labour shortages. Um, there is a shortage of, I don't know, lorry drivers, for example, and that can have an impact. Um, we have other companies which we hold, things like DFDS, the Danish ferry operator, where there was a perception that they would struggle in a post-Brexit world. We always thought that was slightly overstated, and that there would be flexibility and things would always, go across the channel ultimately. And that's proven to be the case. And actually, they've come out with some very good results this morning. Sure, passenger growth has not recovered, but that's because of the pandemic. People haven't been able to go on holiday to France. But in terms of freight, it's continued to go across the channel. Yes, there has been some sort of increased red tape, but they've actually managed to even make that a positive, helping some of the logistics companies with their paperwork and trying to make that a profit line for them. So look, it still gets mentioned, but it's just one factor, if you like. There's a number of factors out there which are affecting companies' supply chain. So I wouldn't overstate it, and good companies are able to sort of adapt and be flexible.
For investors considering investing in Europe at the moment, what would be your elevator pitch?
Look, overall, you've got to remember that European smaller companies, maybe surprisingly, is geared to global GDP, and we're expecting we are seeing a recovery in the economy as we sort of hopefully come out of this pandemic. The other thing I'd say is, look, Europe and particularly smaller companies are very much at the center of this trend towards things like sustainability and energy transition. Europe is leading the way in that. And actually, if you invest in European smaller companies, almost by default, you will get a lot of exposure to this whole sort of sustainability theme. And we have it running through our portfolio. Whether that's Nexans, a French cable company, helping with sort of high voltage cables so that wind turbines can be connected to the national grid. So that's another thing. And our fund specifically, as I say, will give you that exposure to a lower end of maybe the market cap scale. And ultimately, if you invest in European smaller companies, you will see greater growth at lower valuations than you would in our larger cap counterparts. And over time, history tells you that European small cap significantly outperforms large cap.
You mentioned earlier this year in the Trust's half-yearly report that you had some reservations about pockets of valuation in the market and the risk of unanticipated events related to the pandemic. Do you still have both those concerns, and what are the big risks for investing in Europe at the moment?
As maybe I've implied, we think that a number of the growth names, the valuations have got a little bit stretched. The multiples are quite high. The logic of that is quite clear. I mean, we've had low interest rates, low inflation, and very low bond yields, and people have been able to use very low discount rates to value companies. We're not sure that will be the case in the future. We think there are signs of inflation in the system. We are seeing wage pressure. We are seeing supply chain issues. So yes, I still think that some of the growth names are overvalued. I mentioned sort of sustainability, for example. That's not a reason to overpay, and there's no need to overpay just to say you can get ESG exposure. I mean, the other sort of big macro sort of risk, I mean, for European smaller companies, but also equity markets in general, is, the variants of COVID come back and hurt, so we can't reopen the economy. I mean, hopefully the signs are that the vaccines can prevent large-scale hospitalizations and deaths, and therefore we can slowly reopen. But there are risks out there, clearly, and that's mainly connected to the pandemic.
As you mentioned earlier, European smaller companies have significantly outperformed their larger counterparts over the long term, but they remain under-researched and under-owned. Why do you think that is?
Money. Look, I mean, investment banks are basically there as commercial enterprises to try and make money. Clearly, there's higher trading volumes in large cap stocks. You can raise more money, through from investment banking for maybe larger companies. MiFID II hasn't really helped in terms of research coverage at the low end of the market cap. But, look, that creates an opportunity for us. I mean, there is some research, let's not overstate it, but far less than the large cap market. But that sort of imperfect nature of the market creates an opportunity, hopefully, for us to outperform.
The trust has some exposure to turnaround stories. Could you run through a couple of examples?
Sure. I mean, I mentioned to you earlier Nexans, the French cable company, which historically, struggled to make decent returns. But the management came in and they've cut costs, and then they've been fortunate enough to have this sort of tailwind of sort of electrification of the economy. We need transmission networks, we need high voltage cables to sort of connect to wind turbines, as I mentioned. I mean, other companies that would fit that criteria are things like Quadient in France. On the face of it, you might think, well, its traditional business is pretty dull and slowly dying, which is franking machines, for your mail. But that's still a business that's required, and it generates a lot of cash. And they've managed to reinvest that in businesses like parcel lockers and businesses helping that same customer base of smaller market enterprises in terms of consumer software, communication software, so they can communicate with their consumers. So companies like that, or even companies like Allied Irish Bank, which have had to go through sort of closures of branches, unfortunately laying off of staff. But, through digitalization, a shift towards online banking, and through some selective acquisitions that have been earnings accretive, these businesses can turn around. Goes back to, let's look for those inflection points. Let's look at companies which maybe a number of the market participants aren't looking at, and that creates the opportunity. It's something that we do and will continue to do.
And finally, do you personally invest in the TR European Growth Trust?
Yeah, look, I've got a scary amount of exposure. No, I shouldn't say scary, but look, it's my largest investment by far. Being open with you, I've been able to get some shares through remuneration from my job, but I also bought into it personally. So as I say, it's by far my largest exposure in terms of investments. And my personal wealth is very much tied into TR European growth. So look, I'm aligned very much with the investor base.
Ollie, thank you very much for your time today.
Thank you very much.